Boom. Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about whether or not the king, Bitcoin, is more likely to be breaking out or breaking down as we move through the month of February. The next 12 to 24 hours of price action is going to be extremely telling. So we're going to keep this one short and sweet and just dive straight into the charts. But before we do, you guys, please throw the video a like. Let me know in the comments down below whether you think we're going to break out to the upside or the downside and explain why. And I don't know if we're ever going to make it to 50K, but if for some reason you're not subscribed, please hook your boy up and subscribe to the channel, all right? And then actually after we talk Bitcoin, I do want to spend some time at the very end of the video giving you guys my 2 cents and general thoughts around the equity markets right now. So we'll take a quick look at maybe the S&P 500 or the SPY, and actually at the US dollar or Dixie. We'll talk some macro. Google just announced earnings earlier today. They absolutely crushed it doing a stock split, so that'll heavily impact the equity markets. But PayPal announced today they flopped. They're tanking after hours. So there's a lot going on right now, you guys, and I just want to give you guys some of my general thoughts on how the near future will look, not only for the crypto markets but for the equity markets, because of course the price action of the greater equity markets will heavily impact and dictate the general direction of growth markets and tech focused markets like Bitcoin, Ether, all the goods. Okay, so we'll spend some time at the very end doing that, just a heads up. But right now, let's talk some Bitcoin. So obviously, you guys, you can tell why the next 12 to 24 hours, this next daily candle that's coming in hot, is going to be extremely crucial or relevant for Bitcoin in terms of medium to even longer term price action. All right, and that's the fact that we are currently dancing directly on top, directly on this line of resistance on Bitcoin's overall downtrend since the high we saw just under $69,000 on November 10th. Since then, very obvious downtrend, textbook series of lower highs and lower lows. Really strong sell-off right here. Since then, we have been trading in this ascending channel. You can see here between these two white trend lines, and right now we are sitting directly on top of this very significant trend line right here. Okay, so you can see this is obviously in play. We are now on the daily candles. As you can see down here, the daily stochastic RSIs are about to curl to the downside, which if that occurs, if Bitcoin does see a red candle on this next daily closure, that will resolve itself in a curl over the blue will curl over the red to the downside. And when it comes to medium to even longer term price action, that is bearish. And obviously there is a lot of resistance that we're seeing right here. Okay, so the first level of resistance, obviously the white line, the top side of resistance on this descending channel. Then you have the previous lower the previous floor of the lower low that will likely act as a new ceiling for the next wave of this lower high on just this stair step down that we've been seeing since November. So right now, you guys, just from a technical perspective, we are in an environment with raising rates. The value of the dollar is going up, which is why I actually want to take a quick look at the Dixie after this, or the DXY, the US dollar index, because ultimately if the dollar is looking strong, everything that trades against the dollar, especially inflation hedges, especially very hyper growth inflation hedges, which Bitcoin is, king of the crypto markets and king of inflation hedges in my opinion. If the dollar is gaining strength, then Bitcoin fundamentally is just gaining weakness. Okay, and on top of all the fundamental headwinds that are blowing Bitcoin back, obviously these technicals are looking bad too. Again, daily Stoch's about to curl down, and there's a lot of resistance over just these next few $100 of price action. Okay, over like percent or two of price action. Okay, so if we break out here, if Bitcoin, I will say, can break above $40,000, obviously 40K significant psychological even as well, that would be exciting. But right now, what it's looking like, again, you guys, as we zoom in here, you can see just this very organic climb up we've seen since the lows we saw back here in January, like January 22nd, January 24th, those extreme levels of volatility. It's been an organic climb back. This looks very nice, but it just looks, just looking at this chart, you don't see everything, you don't see things being eaten back up real quickly. This is organic price action, which is nice to see. But just looking at this trend, you guys, when you're talking just the objective truth of the current trend, we are still in a downtrend. This is still a very obvious series of lower highs and lower lows. We're still below very significant levels of resistance, very significant ceilings that were his previous floors. So if, as a betting man, again, always know you guys, my money's where my mouth is. It makes sense to me that we do see more downside. We did not hit the 30K price target that I thought would hit on February 4th. After a few days after I posted this video is when this happened right here. I'm sorry, February 1st is when I called for the $30,000 Bitcoin. We came pretty close a couple days after posting that video. But again, the force is strong with Bitcoin. There's a lot of people that want Bitcoin to succeed. I want Bitcoin to succeed, but again, I'm a trader and I'm just doing my best to optimize gains for the long term. But again, just objectively speaking, rationally speaking, at least in my rational mind, I think more downside is likely for all the reasons we just mentioned. Worst case scenario for Bitcoin, I think, say equities turn down, which I don't think is, again, Google crushed it. Big tech is crushing it, but medium tech like PayPal just flopped. Starbucks flopped. So consumption is down. So the macro is super weird right now. And again, the dollar is gaining. So we're in a weird space. But worst case, regardless, from just a general trend perspective, I do think that over the next week or so, week and a half, February 9th, just where this trend, where it chose to draw this target on this trend line, on the lower line of support on this descending channel, would take us down to $24,000. That was a high. That was a pretty significant level for Bitcoin. Back here, you can see Bitcoin, once we went parabolic, reached up here. That's where we saw one of those first corrections back in December of 2020, right around $24,000. So that is going to be my absolute downside price target. It doesn't make sense to me that, I mean, hey, maybe we see a daily candle wick down to like 18K, but I think anything under $20,000 is going to be almost immediately eaten back up because Bitcoin is just such a titan of industry. So maybe we see that, but personally at $24,000, I'm excited about Bitcoin. I'm excited about Bitcoin miners, Coinbase, all those good names, okay? So that's worst case scenario is over the next week and a half or so, really fall off a cliff and hit that $24,000 mark. Hey, sooner, honestly, in my mind, the sooner the better. Just get it over with so we can start accumulating again. But I do think that it's also possible we kind of like the organic growth we just saw over the past week and a half or so. Maybe we see an organic deceleration here and just kind of hug this top line of resistance. And at the end of the month, February 28th, if we just kind of hug again this top line of resistance on this descending channel, that would take us to about exactly $30,000 at the end of February. Okay, so February 28 days this year, end of February target is going to be $30,000 for BTC. Just again, given all the macroeconomic fundamental headwinds that Bitcoin is facing at the moment. Okay, but hey, maybe in the wake of Google and big tech's earnings, Facebook's reporting soon, good old Meta. We'll see what happens there. It's going to be interesting to see how that impacts the markets, but it's very likely that tomorrow, at least, S&P 500, the triple Qs, the NASDAQ, is going to gap up. We're going to see a lot of green just because Google's up freaking like 8 or 9% after hours, which is absolutely insane and honestly, in my opinion, unhealthy, similar to what we saw in Tesla a few days ago as well, is not super healthy when you see $2 trillion companies gap up 10%, okay, and immediately add $200 billion to their valuation. Okay, but regardless, I don't know how it's going to play out, but tomorrow it's very, very likely that both the SPY and triple Qs will open to the upside. How will the day end? I don't know, because again, in that one, I can't remember which exact video it was, but buy the rip, sell the dip, or buy the dip, sell the rip, is like most of the days in the equity markets, in the stock markets for the S&P 500 start pretty solid and then kind of taper off over the day, or vice versa. Okay, so you're always expecting some end of the day volatility if we kick off the day tomorrow in the green, just because it's like, again, these earnings, everyone knows about them already. It's pretty unlikely to me that we close super green as well or see a rip to the upside at the end of the day. So again, you guys, this is all just ballpark and spitballing ideas. Let's read through this, get some of my more composed thoughts. This is actually the intro to yesterday's newsletter that I sent out, but I just go over a few of my general thoughts when it comes to the macro, and then we can take a look at the Dixie, the US dollar index, on the charts to close out the video. Okay, so it's now Tuesday, marks the closing out the volatile month of January with a bang. 2022 has been an absolute roller coaster of price action so far. Obviously, the majority of volatility has skewed to the downside, but today markets are kicking off the new week and moving into February with a much needed breath of fresh air. Although this may feel like the race back to the bull run that many investors are hoping for, I still believe more long-term downside is ahead of us. And again, even in the wake of these big tech earnings. Just throwing this out now, I do think Facebook will probably impress. I do think Meta will come out with some solid numbers, but I do think Amazon considering Starbucks just flopped, PayPal just flopped. That shows that spending is down. So consumption of content and ad selling is up. That's why Google just crushed today. They're also doing a stock split. But spending, consumer spending, there's just, again, dollar gain strength. There's a lot of people lose money in the markets. They're going to be less inclined to spend more money. So consumption is up. Consumption of content, I should say, is up. But consumer spending is down, which ultimately, from an economic perspective, that's not good news, okay? When the economy is slowing, it's pretty likely the equity markets are going to slow down as well, okay? So it's important to remind oneself of the difference between a bounce and a rally in a market like this. If you ever have medium to long-term conviction around a macro trend, try not to let short-term price action cloud your better judgment. I remember reading something years ago in my early trading days that was something along the lines of volatility is not a sign of optimism. It's typically the sign of the end of a bull market. This is a saying that's constantly resounding in my head during times like this, and in my experience, it tends to hold true. Okay, so again, you guys, the macro trend, the overall trend, Bitcoin, the perfect example of this. Although over the past week and a half, we had that breath of fresh air, you start to feel optimistic as a long-term investor. It's still important to remember that the trend from a technical and fundamental perspective right now still leans bearish, and it has since. We saw that peak back in November, okay? So we are still objectively in a bear trend. There is still macroeconomic headwinds on the horizon. Let's take a look at Dixie just to talk to you guys about what I'm seeing here. So Dixie, last time we looked at VIXY, we were right here calling for a rip to the top side to test resistance on this beautiful long-term ascending channel. Almost came up. Right now, when it comes to the shorter term, Dixie, for our daily Stokes have curled to the downside. So maybe we see some sideways price action, but I do ultimately think we are basing out a higher low on this shorter term uptrend after this big rip that Dixie's seen over the past few days, and kind of falling off a cliff in the wake of the equity markets coming back. But ultimately, the equity markets, Bitcoin, are in bearish trends, and Dixie, which again, when Dixie is good, equity markets, cryptocurrency markets, bad. Okay, Dixie good, stocks bad, crypto bad. So those are in objective bear trends. Dixie is in an objective bull trend. Therefore, I do think that Dixie on the short term right now is establishing this lower high, or this higher low, I'm sorry. So he's saying lower high, but higher low right here. And I do think ultimately, even if we do go sideways for a couple of days, we will make our way up to at least test the top side of this ascending channel, because we haven't yet. And if we break out beyond that, that gets very exciting for Dixie, and will make me obviously even more bearish on equities and crypto, okay? But hey, corrections present opportunities for the long term. The past few days, if you guys have been trading this properly, I mean, congrats to you if you scooped up some of our favorite, I mean, Coin, Plug Power, SoFi, any of those names a couple of days ago before that big like double-digit rip to the upside, Riot, Mara. Congrats to you. Cheers to that. I didn't. So if you guys want to help your boy in his time of need, I'm just kidding. But if you guys want to know exactly how I'm trading through this, just learn from my failures, learn from my successes as well. But if you want a complete breakdown of my entire personal portfolio, you guys want to know when I'm buying, where I'm buying, what I'm personally trading on a day-to-day basis during market hours, where I do send out one of these bad boys below this, go into the trades I made that day. And then in part 2, I send out the chart of Bitcoin, chart of the S&P, chart of Tesla, chart of Render, Mono, whatever we're talking about, and just give you guys my 2 cents on a daily basis, again, during actual market hours. So that's going to be $15 a month, $40 for every 3 months. Really means a lot if you guys check that out. Again, I do my best, truly, to make that worth your guys' hard-earned money. So again, appreciate it if you check it out. It's a good way to just support your boy if you're interested in that as well. And yeah. Again, means a lot if you guys check that out. But if not, no worries. It means a lot that you guys watch this video, especially if you're still here. So if you are, you're a real one. I appreciate you. I'll see you downstairs in the comments. And until next time, always remember, take action, make waves. Peace.